Welcome to Unlimited Capital on the Best Ever CRE Network. I'm your host, Richard McGurr. Today we are experimenting with a new show format, which we're calling Capital Clinic. So what these are live deep dives with real sponsors on real deals, where we help people and give them actionable strategies that they can use today to raise more capital. So today we spoke with Jarrod Joplin from Common Capital Investing, and we gave him some tips which were, I think, for longtime listeners of the show, not going to be a surprise. But I have a feeling this guy is going to raise a ton of money on this deal. It's a great deal, and there's just a couple things that were separating from him from being able to close this deal with the capital he needs. Hey, Jarrod, welcome to the show.
Happy to be here. Thank you for having me.
Yeah, so Jarrod, your company is Common Capital Investing. And the reason we're here today is that we're going to do a bit of a sales and marketing clinic to help you raise for a great deal that you're working on, but the capital's coming up a bit short. So why don't you tell us a bit about your firm and the deal?
Absolutely. Again, thank you for having me. I'm super excited to talk to you guys, and I'm excited about this deal as well. So our company's Common Capital Investing. I am one partner of three. And you can look us up, commoncapitalinvesting.com. And we've been real estate investors for quite some time between the three of us, mostly, small, single family. I've been doing it since 2007. I actually got my start in Colorado. We got into apartment investing about 5 years ago. And like many folks, I think that make that transition, we wanted to scale and needed to learn how to do that with apartment investing, and got some guidance, some coaching, and we own a 33 unit apartment in San Marcos, Texas. We've had that for 3 years. We've been trying to buy additional properties over the last few years, but as many of you know, it's been challenging to find good deals. We've been under contract on a few things and backed out because of this or that. And that leads us to this deal. So, and a quick just aside, actually, the three of us, this was kind of a side hustle for us, real estate investing. Last year, in October, I actually left my full-time job with a year runway to go at this full-time. And not only to just buy a property, but to really start building a business. And it's been an incredible journey. And we'll get into the details of some of the successes and some of the challenges. But specifically, this deal that we're raising for now is Vista del Sol. This is a 54-unit apartment in Fort Worth, Texas. It's inside the Loop, kind of in the southwest area of Fort Worth. If you're familiar with Fort Worth, there is a theological seminary. This is really close to that. In fact, this building used to be student housing for that theological seminary. I think it's called Southwest Theological Seminary. I think until the early 2000s. So it's a commercial grade type property, which we've discovered through our due diligence, which is really exciting. So it's 54 units right now. It's considered, workforce housing, affordable housing in that Southwest area, which is pretty typical for that area of town. But good infrastructure. If you know anything about Fort Worth, it's a solid area. It didn't receive quite the same amount of supply that the Dallas or the mid-cities area did. And so it's been a historically strong property. It is not your typical kind of quote unquote value add, as we've come to understand what that means. It's a cash flow day one property. It is at 90. I think there's one vacant unit right now based on our last rent roll. We're expecting the new rent roll any day now. But from May's rent roll into, I think, maybe even into June, running really well. So we have some opportunity to add some value through doing a few things like covered parking. We're going to implement RUBS and make some repairs to mitigate some. It's a flat roof property, which I know a lot of people love to hate, but we're actually going to kind of repair that entire roof and have a quote to do that day one. There's some plumbing repairs that need to happen. So it's it's your solid kind of affordable, I wouldn't say run of the mill, but it's a solid investment that is operating well right now, that we can't wait to sort of take over and put some things in place and even make it more efficient and more successful down the road. So I'll stop there, and you can ask me maybe some more detailed questions about it.
I think that's a great start, Jarrod. And I mean, we're going to kind of pivot away from like the deal specifics to talk about, hey, how do you bring capital to the deal? Couple quick notes though, of course, Richard and myself, the best ever, we're never endorsing deals. We are just, doing tactical discussions on here. But like I scanned over the deal, and like, for me doing first, high level scanning of deals, like I don't see any major red flags, right? Hey, you're using a 60% LTV. You got long-term fixed debt on there. While I'm not a Dallas expert, it seems like a solid part of that sub-market. Like you check off a lot of like those major risk mitigation things on there. The first thing that pops out to me when I'm looking at your slide deck on here is you don't talk about when cash flow is coming.
Yes. I watched the webinar. I had the exact same takeaway as I was like, where's the returns? Where's the returns? Tell me about the returns.
Yeah. And the cash flow right now, no matter what the asset class is, right? Like no matter what the asset class is, especially in this market cycle where things are very volatile right now. And, we all know someone or in a deal ourselves where, hey, someone's getting wiped out in a value-added apartment building from 3 years ago. Talking about risk mitigation, super important, which I think you do a good job of, but there is zero, hey, your first distribution comes 90 days after closing, or cash flows from day one, and show the schedule of when the cash flow timing is. Because something that, I've done, and I think a lot of us have done as well, is, hey, we're all very far in a real estate journey here, right? And we're pretty sophisticated, pretty smart, pretty savvy. Rewind the clock, 3, 4, 5, 10 years ago to a younger, less savvy of us, and also someone who's not full-time in real estate. They don't have that same knowledge we do. And they're like, hey, when do I get cash flow? And what's going on here so I don't lose my money? Like, keep it simple, stupid is kind of like my very first high-level thing. And I would really focus on as like the foot forward is, hey, this is cash flowing from day one or quarter one, whatever the proper terminology is. And that's monthly or quarterly cash flow. But I think that is like the number one thing you're lacking is just you're not selling the best feature right now, or one of the best features, which is immediate cash flow.
Yeah, Chris, I appreciate that point, and it's fair. I think so. One of the interesting aspects of this deal is that we started with the 506B. We started with friends and family, and raised a little over $1 million, and then converted that to a 506C so that we could start advertising it. Talk about it here, and we did another webinar at 506C. We did talk about it in our 506B webinar, but it wasn't in the deck. And so I think that's a really key point. And I think that's something that we've learned is that, people are looking for cash flow right now. And so we need to not bury the lead on this and not just say cash flow is the win. So specifically for this deal, we've been telling our investors that expect your first return, their first full quarter after operations, after acquisition, and we put our operations in place. So, if you get it in the middle of the quarter, then after the first full quarter. So we expect to close on this deal hopefully within the next month or so. So after Q4, folks should see their first check in the mail through a distribution.
Yeah, because that's Chris and I have been raising capital for about, call it 4 or 5 years, and what we have noticed is that the investor requirements for cash flow are at such a premium right now. Like, if you do not have cash flow, I'm not saying your deal's not good, but it means it's going to be dramatically harder to raise. And so the fact that you are day one cash flow, I mean, you need to have that everywhere, because this could be like the very same investor. Like, this is how it is. When interest rates are low and everybody's feeling really good, they push their cash preference way out into the future. And they're like, yeah, I'll take this crazy return, and, I believe in you. And right now, people just need to see, like, what's my income? Because the other thing is that, like, having cash flow day one is a risk mitigation strategy. It means that you have debt service coverage ratio, or at least, like, in theory. and everything like that. And it just makes it look like a safer deal.
To add on here's, so we've raised just about over $60 million in our career. And about half of that has come across 3 credit funds, such like, pure cash flow funds. So three funds, 3 deals brought about half of that 60 million. The other 60 million has been across about 20-ish equity deals, some single asset, some, equity fund deals. But when we take a step back and look at that, hey, 3 deals brought in half the money on the credit side or really cash flow side. And then 20 some deals brought in, equity on there. And those equity deals, hey, some have cash flow, a lot were development style deals. So they were delayed out. When you look at that stat, it really shows you what the appetite of investors are out there right now. And I'd say even the last 12 months, last 8 months, we've even seen that get skewed more to where, I don't know what the ratio is now, but more preference for immediate cash flow and less preference for like delayed cash flow out there. Now, so I think that's a great thing that you have about with your deal here and multifamily value add general is, hey, you have some cash flow now, but then also a big cash flow. I'd really promote that cash flow now as a big part of it and draw out like the schedule, like take the Excel spreadsheet. Hey, here's year 1, here's year 2, here's year 3, here's year 4, and keep it simple, stupid. So I know, hey, if I invest my $100,000, I'm going to get $5,000 back on here. And kind of show the cash on cash return. So that would be like step 1 for like structuring the deal on here. The second question I have, and I think this is always a good way to show, the GP's commitment is, what is your guys' GP co-invest?
Yeah, so we have between the 3 of us around 175K in this deal.
Great. I would put that on there as well. Like there's a big difference. Like I personally will not invest in the deal unless, the GP is putting them your own money in as well. Oh, you don't either you don't believe in the deal or you don't have enough capital to do the deal yourself. Either way, I'm like, oh, that makes me nervous. And the fact that you guys are putting in a healthy co-invest on there, I'd say, hey, I'd promote, hey guys, we believe in this deal. We're putting our money in here. Here's the percent range on here. Here's what we're doing. Like this deal, we believe in. Like that's another thing that really shows the belief. And when we're looking at, a lot of times having, raising money from friends and family and, just I'll say your average investor, right? Non-institutional, non-family office, so much of their underwriting just kind of comes from the know, like, and trust, like the vibe of the sponsor, right? They are not pure spreadsheets like an institution or family offices. It's like, oh, I like this guy. I like this guy a lot. He's putting his own money in the deal. Like so much that comes on there is like your own conviction. And so I would promote that as well, because like, that's a huge bonus to me. You're putting your money in there. Fantastic. Let's shout that from the mountaintops. I see you shaking your head, Richard. So I'll be quiet for a second.
Yeah. I mean, I think the GP co-invest should come like, it's one of the most important things to show a retail investor is that you are investing with and alongside me. Because usually, especially if you're still in the kind of friends and family stage earlier on, a lot of that network who you're going to be tapping knows that you're a real estate investor, knows that you're successful. And the way that you position this is like, hey, I'm buying this deal. Do you want to come with me? And so, very much highlight the GP co-invest. The next thing I was going to ask is, so talk us through like what your marketing plan has been so far. And I would say all the way from the top, like what does your list size look like? Where did they come from? What are your daily marketing activities? Just tell us.
Yeah, it's a good question. It's something that we're learning, right? So we have I call it our investor community, which are people that are invested with us, current deals, or people that, are interested or have signed up. So I utilize InvestNext, and I take advantage of the CRM tool within that. And I've given them this feedback, and I love InvestNext, but it's not the most robust CRM tool. And I've told them, hey, where is this on your release? I mean, I worked in technology, I understand
Okay,
feature
probably
releases.
don't hold your breath on that one, right?
Yeah, I was going to say, if you worked in technology, I've been using this forever, this analogy. Does a Swiss Army knife have the best steak knife? No, like by definition. And it, like, definitely with any of the investor portals, and like I'm going to insult some people who own investor portals and have a CRM, but those are not CRMs. Like I would say that's not a CRM, just because you can have a list of contacts and everything else. Now, the problem being is you switching horses midstream on this deal is not going to move the needle a lot, but I would prioritize purchasing a proper CRM kind of ASAP. In the world of go high level and everything else like that, if you want to get something out of the box that works pretty well for capital raising, there's a lot of good options there. Chris and I took it to the next level, and we have like a custom built CRM, but I would say that like getting off that CRM should be a priority. How often do you mail your list? I assume that InvestNext allows you to mail the list. Does it allow you to see who clicks links?
No.
Okay.
It does. So, well, let me answer your first question. Yes, you can mail a list. So it's pretty good at that. I at least once a month, I send out a broad communication. When we're with this deal, we've been aiming for once a week, and then for social media, for the first at least month or two, I was doing it every day. Something about the deal every day. So that was kind of the marketing plan. I also hired a VA to start, working my warm network. So basically trying to connect with people, also trying to connect with cold leads as well as in the capital raising or the private market space.
I want to dive into that. So the VA, what country is the VA in?
Philippines.
So $5 to $10 an hour type range.
Yeah.
Okay. So I just wanted, because like Richard has an extensive success with doing outsourcing, and I've done very modest compared to Richard's success over the years. But I've gone through iterations personally. I've done a lot more like the sales and marketing stuff with my VAs, and I've had overall very poor results with VAs reaching out to my list, especially my warm list. Hey, cold list is different, but my warm list, I have personally found it to be detrimental because, like, hey, my people know Chris. Like, they know Chris Lopez, right?
Yeah.
And then when someone who calls them or emails them, with, hey, they don't know real estate, it's not Chris Lopez, it's with an accent, it's very impersonal, and a lot of times actually more of a turnoff. So can you talk about the process like the VA is doing? So you have this VA, how many hours a week is the VA doing, and what is the standard operating procedure the VA is doing with, let's start with your warm list first.
Yeah, so it's 10 hours a week, and it essentially, through both mostly LinkedIn, I've started getting into Facebook a little bit, and to your point, Chris, I'm starting, in fact, I was just looking at messages this morning. I'm like, I have to go back and tell people like, hey, I've hired somebody to help me. I'm sorry, this sounds so, and I'm like, so I literally told them, stop. This, good. In fact, Sunday, I said, stop. Like, this isn't working. Doesn't feel right. LinkedIn's a little bit different because it's a little bit more of a professional.
And people expect spam.
And I've had a little bit of success there. But this SOP there is we, went through, built a list. I reviewed that list, said, reach out to this person. Don't reach out to this person. We created basically initial messages, follow-up messages, and then, I would go in, review those messages, and then figure out where to take over on the conversation. And it's similar for Facebook as well. And that was for the warm outreach. Cold outreach, I had to do a lot of kind of triage because they would find people. I would have to go in and say, like, this is not the right direction. This is the right direction. Oh, yes, definitely reach out to this person. There hasn't been a lot of success, I think, on that. My tactic I would like to do more, LinkedIn Live, more adding value versus reaching out to people and just pinging them. And so that's something I've been thinking about and trying to sort of figure out a different plan around, because I think the typical kind of VA outreach, while it's something rather than nothing, I don't think it has the ROI that I need to see. But I will say this, even though it's been a little bit awkward, I still am. It's been fun connecting with people or reconnecting with people. So as I'm thinking about the long game, I'm especially with Facebook, it's interesting because I'm connecting with people and friends that I've had in the past that I probably would have not connected with if my VA wouldn't have been there. And, I'm like, hey, this is silly. Like I hired somebody, but our connection is really valuable. So, that's the silver lining, I guess, if there's anything. But overall, it's not actually having the impact that I thought it would. And so that's why I literally told them to stop, and I'm reevaluating what we're doing right now.
What are your personal daily sales activities and goals?
Personal daily sales activities. I honestly don't know how to answer that. Give me an example.
Okay.
I don't come from marketing and sales. So I'm learning. I come from building teams, building products, like technology, design, that sort of thing. So
yeah. So here's the thing
background
about sales. There's stuff that is under your control and there's stuff that is not under your control. When you get on the phone call and how a person's going to react to what you're like trying to connect with them or trying to convince them to do something or invest with you, that's not really under your control. It's a little bit you can do. Like you can maybe raise conversion rate from like 15 to 25%, and that's heroic. But that's not going to really move the needle. What moves the needle and what is under your control is how many people you talk to a day, or at least attempt to talk to a day. That is 100% under your control. And it also goes to follow that you can talk to like 20 times more people in a day than you are currently. Like that is absolutely an achievable goal. And while that may not have a 20x sales lift, if you got a 3x out of that, that would be an enormous win. You're talking about going from like a 15% conversion rate to a 25 compared to like, I just described a 300% lift, And here's the other thing. I'm just going to like assume that you don't have an enormous list. Like, do you have like 9,000 people on your email list?
No way.
Yeah, exactly. And so
maybe 300, 400.
That's great though. I mean, that's not bad. Like you can raise the money with 300 people on a list without a doubt. Especially because these are probably like the hottest 300 people that will ever be on that list, like as a cohort. So what I would say that you need to do is you need to be personally sending 20 messages a day or calling 20 people a day. Like at a minimum. Here's the other thing. All this top of funnel cold LinkedIn stuff, none of that is going to convert in time for this deal. Like zero. Like all of that is like a 6-month, kind of plan at a minimum. And you're in like an emergency today needing to close. And so I think that kind of where you're going to find success is you need to be like talking to 20 people a day at a minimum. I mean, and you can boost that number too. Like there's like Chris, you came from like the hardcore sales grind world. Share with Jarrod what your cold targets were, because he uses this to motivate our sales team all the time.
Yeah, I mean, this is 20 years ago now. And I was very much just doing pure sales back then, but it was $300 a week was like the minimum threshold that I set for myself. Again, this was, more, cold-ish type leads. So I didn't have like a warm network. They'd opt in, there was some lead magnet they'd opt into that was relevant to what I was selling back then. Not in real estate, but they opted into something. So it's, not pure cold calling, but a few steps above it. But they definitely, were not warm to me. And, from there, a lot of it depends on the product, the quality of the leads and everything. But if you're in pure sales mode, 300 outreaches a week is like the minimum. Now, of course, like, for example, we just hired onboard new investor relations a month ago. And we're kind of going through getting him, scaled up to our program. And we have a very, very warm list right now that he's going through. And it's like, oh, gosh, okay, I make 60 dials a week and I'm at like a 40% connect ratio. So there is some like give and take based on, hey, you got to do high output. But if you already have a very warm list and you have a really high connect rate, you don't need to do high volume. So, hey, hey, how many calls, it's calls, connects, DMs, text messages, how many outreach you have to do to get a conversation. And then how many of those conversations lead to, I'll say a presentation of, hey, them reviewing a deal room, you giving the 5-minute, 10-minute overview on there. And then how many of that leads to a soft commit and how many of that leads to, signed docs and money wired in there as well. So some very high level metrics on there. The fact that you've got a very warm list and you're not only just making calls right now, 300 calls a week is probably unrealistic, but you'd want to set some benchmark a day. Like, hey, I want to make 10 calls, 3 connects a day. And then you start figuring out your ratio on there. And to kind of loop back around to VA, I think you should probably dump the VA from the outreach role is my gut, because you're number one, 10 hours for a VA doing outreach. It's a waste of time because you want someone full time doing it. You just make it worthwhile, like your management bandwidth, like those 2 or 3 hours a week you're spending managing that person. And they were probably doing a subpar, outreach. It sounds like those 2 or 3 hours you're just better spent doing your self-direct outreach. Especially if that person's, an hour and a half a day. Like it's just the numbers don't make sense on there. So I would totally cut out the VA from anything front facing. Now, perhaps that VA can help you on some back end stuff for like, hey, I'm too busy. This is me. I am too busy to like update the CRM. Richard will attest to it. I am horrible at that. I am good at getting people and good at getting people like to the deal. Anything in between, it lives in my head. But when I am in like high production mode for, doing deals or connecting, people to deals or brokerage deals, whatever it is, I would have my assistants at the time. I would have a phone call. I'd record a voice memo, text it to him or Slack it to him. Oh, hey, Alex, I just talked to Richard, blah, 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 blah. Send Richard this email, update the notes here, do this, do this. Richard's out of town with his wife right now. They're going to Granby Lake to go spend the week. I need to call them in July 10th when they're back in town. And then I would use the VAs that way. So it would, my time is best spent either looking at deals or talking to the person. Everything in between, I would try to get off my plate. And that's where I had the most success with VAs is getting rid of like that minutia on the back end. Like for me, updating a CRM is just like, it is soul draining to me.
This is a common topic. It's so funny.
It's not just to me, right?
Yeah. One time Chris was like, hey, so who can make call notes in the CRM? And I knew what he was asking and I was just annoying. And I was like, Chris, any Salesforce user is able to do this. And he's like, that's not what I meant.
Yeah.
No, I'm definitely in that boat.
Yeah. And you're a founder, right? That's horrible use of your time.
Yeah, absolutely.
Okay. I have another thing. So I think that this is going to be like, this is the tactic that is going to close this deal for you is number one, the daily activity goals. Like you need to own that. Like this is the most important urgent fire in the company. I would also talk to your other 2 partners and give them the exact same goal. Is you guys need to be like having conversations every day. And the more people you talk to, the more capital you're going to raise. Like that is the simple equation that we're working with today. The second thing that you guys need is some sort of engagement tracking. And what does that mean? Like, that's why it's probably buried in the conversation we had earlier where I said, can you tell who clicked the links? The fact that you can't is a huge problem because, with digital technology, let's say that, okay, so your CRM can't tell who clicked the links. So maybe actually I'm going to go backwards and say immediately move to a mailing system that can do that. Because that's not like a whole shift in the CRM. But at the very least, start sending mail from a system like ActiveCampaign. We like ActiveCampaign that'll be able to show you a call list. Because if you say, and also you should be sending way more than 1 email a week. I would be sending 2 or 3. You can talk about various aspects of the deal, like, hey, here's the team background. Here's the submarket. Here's our risk mitigation strategy. Here is our cash flow timeline. Here is the neighborhood. Here is our value add strategy in detail. Here is this. Talk about a different aspect of the deal every single day. It's fairly easy to come up with that. Another thing that I would be doing is bringing it back to your cold/warm outreach. So these are people in different levels of your sphere. You should be sending them the webinar in a format where you can tell if they watched it. So Dropbox has stuff like this, where like they have to enter, like they have to log in essentially to watch the video. Anyone who actually logs in, because that way you can go much broader. Like you can send the webinar to like, 50 people a day, 30 people a day. That's a lot easier than like necessarily getting them on a phone call. But anyone that actually watches that webinar goes right to the top of your list. And that's who you're calling every day. And if you have the rest of your deal room in there, it's anyone who like logs in twice, for example, that guy is highly, or girl, is very, very interested. So I would come up with some sort of like MVP, minimum viable product of like, you got to know who's engaging with your stuff. Like I would call that a non-negotiable to figure out as soon as possible, because otherwise, like if you make your 50 connects a day and send people a bunch of materials, you therefore have to make 50 follow-ups in order to like, did you watch it? Did you watch it? It's a lot better if you can actually figure out which one of those people watched it, and then those people immediately move to the top of your list. Like we have a view and active campaign that's basically like anyone who opened a certain number of emails and clicked a certain number of links in the past like 7-day, 14, 30-day periods. And the nice thing is like having that view set up in active campaign means it's always up to date. Like we send 3 or 4 emails a day, but it's quite funny because when I first made that view, 2/3 of the people that were on that list had already made an investment that month. And I was like, oh, so clearly this works, and that we were able to like then log in, and going forward is anytime someone gets added to that conditionally, you're like, this person needs to be called immediately. Like anyone, like that's the other thing is your emails need to have lots of links, and that the purpose of those links is literally to just draw out clicks and to be able to see the activity. Like you could say like, hey, YouTube is here, deal room is here, slide deck is here. The other thing is, have you done, like we need to give you more content for people to engage with. Have you done a full financial model walkthrough yet?
No. I mean, other than individuals who ask for it, but not, publicly or live.
I would do that as another webinar, because that's another marketing opportunity that you can promote. Is you can say, hey, we're doing the financial model walkthrough now, like where we're going to answer all your questions of like, where did my rent comps come from? Where did this come from? Where did this come from? Because one, that's going to re-engage a bunch of people. Number two, doing that live is not the best use of your time, especially because it won't be nearly as polished as if you prepare. Mm-hmm. And so, that makes it. And the other place I'm going with this is that if you have a system that can track anyone who watched the webinar and watched the financial model walkthrough, that person is now like even higher, like highest possible hotness type thing. Like you need to have all these touch points and be able to compile lists of people who have like done multiple touch points, because like if they've engaged with one piece of content, it's a powerful signal. If they've engaged with 2, it's a dramatically more powerful signal, because it means that they've gone beyond like, I'm checking this out. Like it means that they're genuinely interested. There was a lot that I just said there. I mean, do you have any like questions or ideas that come to mind when I told you that?
No, it's a great idea. And you guys are just pouring into this, which I love. Clearly you're experts, so it's great. And I think the reality is that we raised for a deal. We've done mostly friends and family. It's been our network, right? Between the 3 of us, we've been fairly successful. And what we've realized through the deal that we're working on now or raising for is that we have to shift into this sales and marketing mindset, right? And I've kind of resisted that in a little bit. And I'd love to get your take, because I think this is something that resonates with other operators, is that, either you have to learn those skills and learn the systems, or you need to partner or bring somebody on your team that has that capability and that experience. I've always kind of thought of it as a little bit of something I wanted to stay away from, but what I'm realizing is that it is something I have to lean into, and really identify those processes. Actually, a little bit of a addition to this is that I hired a fractional COO to help us with the overall business structures. And that's actually one of the things that we're leaning into is this kind of the capital raising side of the business. And there's a glaring gap there. And a lot of it is what you're saying, right? Is that we're utilizing subpar tools. We don't really have a defined process. And even though we do have one and we're sort of following things, but we're not treating it as we would treat, operating the property as it's a business, and there's seriousness there and there's financials, and we approach that with a much different, more professional mindset. And we're not approaching our capital raising in that same mindset. And that's one of the areas that we're learning that lesson through this capital raise. So I'm appreciating what you're saying, because I'm receiving it as like, hey, these are professional people, clearly experts, and you know what you're doing, and so you're identifying those gaps in real time with me, and I appreciate that.
So here's something you mentioned: the possibility of bringing someone on. I think that would be a mistake, and I'll tell you why. No one will be able to sell, close, and persuade as well as the founders. Like, you are the brand. And you come from a technology space. I follow Jason Lemkin's blog, who's, runs SaaStr. And even he says, like, you get to founders who run 100 million ARR businesses, and they're like, I've never been doing more sales. And you're talking about a 100 million ARR business. Like, that's a business with like a couple hundred employees, right? And the thing is that no one has the trust when you're bringing in a big account that the founder's going to have, ever.
Yeah.
And so I would say that it's like absolutely not optional for you guys to like really just embrace, for lack of a better word, or come to terms with the fact that like a third of your job at a minimum is selling at all times. Like it just is. Like, and that's the easiest way to approach that too, which I got back before, is like this activity-based sales, or ABS. Because it's such an easy system. Like, are you calling enough people a day? Are you setting enough meetings a day? Those are the only two things that are really under your control. Is like, did I call enough people, and did I have enough meetings? And if you're not having enough meetings, then it means you shift the KPI to doing more calls until you have enough meetings. Like, the other thing that you guys need to be systematizing is getting new investor leads. Which you are kind of working on with cold outreach. It's just the reason that Chris said to kill it, and I kind of supported it, is that, like, I'm sorry, but it sounded a little half-baked, type of a thing. Like, I would maybe we're like, I hired a VA and here's a list and he's DMing people. Like, what you probably need is a lead magnet. I mean, I'm getting a little too far ahead, but like, for now, you guys are like, need to combat close this thing. Like, so I would be calling your existing network. I think Facebook is probably a great place, because at the very least you have trust on Facebook. Like, I wouldn't go all the way to cold traffic. None of that is going to close. So I think it's who's on your list now. And then like, those are people who are likely to invest, I would say, like, as a propensity. Second, on Facebook, those are people who might invest, because at the very least, like, they know you, kind of a thing. And so they could potentially hand you $50,000 or $100,000, because at least they've known you for 6 years. That's what it's going to take. Go ahead, Chris.
I would say so.
Chris wants to jump there. Go, Chris. Let's go.
Well, no, I've got, because I totally agree with Richard, but I want to play on different seed here. Now, I agree with everything Richard said. Hey, you got to stay founder focused on sales. I've made that mistake in the past and get drawn back into like, oh wait, why aren't things performing? Because I'm no longer doing the core sales activities, right? Like, duh. I've made a mistake more than once, and every time I'm like, come on, Chris, stop being stupid, right? But here's something else too, that like, this is a somewhat, emerging trend in capital raising and real estate, and real estate private equity, is, looking to have like, call a fund manager, a capital allocator, or fund of funds. Now this is a lot of what, Rich and I have done over the years. And so it kind of goes down to, yes, you want to go out there and work your investor database, and you have your warm network. And then, like, some sponsors, they say, hey, we got to go out there. We need more investor leads. Hey, let's go out there and get a CRM. Let's go out there, create the lead magnet. Let's go out there and do the social promo. Let's go out there, do podcasts. Let's do cold traffics. And they were figuring out the how. I'm a big fan of, I'm drawing a total blank on the name of the author, but Who Not How by, who wrote that?
Hardy. And Dan Sullivan.
Yeah, Dan Sullivan. That's the, and so, yeah. Okay. So, think about that who, not how. So like a very successful thing is, hey, yes, there's some how you can do, like definitely like fine tune and sharpen the saw on your current investor network. Hey, incubate them, get referrals, take care of them. That's going to be like your right now your best use of time. Now, longer term, you might say, hey, let's go out there and figure out the right who. And for example, you say, hey, rather than us going out there and trying to build up like a database of, 500 LPs or potential LPs, we can go out there and have a half a dozen or dozen relationships with fund managers or fund of funds. And these are, real estate professionals where they just focus on not deal operating, but deal sourcing. And then they bring the deal to their network and they create a mini marketplace on there. And a lot of times you can hack their network or kind of like work their network node. Hey, if you develop a relationship with one person, a lot of times their average check size is $500,000 to $1 million. And that might be a better leverage of your time on there. Now to do that, hey, you still have to go out there and put the time in, develop the relationships. And you have to kind of like, restructure some economics. So, hey, if they're writing you a $500,000 check, you got to give them some, spread on the meat and the bone so they can make some money and still give their LPs the same or better deal that your friends and family LPs are getting. But I think this is like a really good, medium to long-term strategy. It won't help with it for this deal, but for the next deal and future deals, phenomenal strategy because it leverages your time. And there is a growing number of fund managers out there who don't want to operate deals, but they're savvy, they're smart, they underwrite it. And in their friend circle, they are the real estate guru. Hey, what's Richard doing in real estate? Oh, Richard has this deal. I trust and know like Richard. So Richard says Jarrod and his group are good people invest. All right, Richard, I'm going to throw in $50,000. And the nice thing from that business perspective is, that usually comes down to a lot of like sweat equity, time and effort in developing those relationships. But you're not having to go out there and put someone on salary or do anything like that. It is still performance based. Hey, if they bring the capital, it's a win for you, a win for them, a win for their LPs. And then I'm going to switch gears here. We have a lot of fund managers who listen to this podcast as well. Like this is where you look for opportunities with Jarrod and his partners where, hey, experience, good deal. Hey, what's their biggest pain point? The biggest pain point is capital. Well, if you can go out there and help bring capital, guess what? Now you can get access to a really good deal. You help your LPs out and you'll make money along the way as well. And that's where sponsors can look for fund managers and fund managers can look for sponsors where, hey, your biggest pain point is capital. Hey, Jarrod, let's hop on a LinkedIn call or hop on a Google call. I may be able to help you bring some capital on there. So my rant's over, but I wanted to get that in there because I think that's like a phenomenal strategic opportunity for you and your business.
Yeah. I'm actually working on a report on how to cultivate these fund managers. And one of the easiest things that most sponsors can do is I would look at your past LPs and if any of them could be a good fit. And they're often usually business people or not business people, like former entrepreneurs or current entrepreneurs, because those are the type of people that are very risk on and self-motivating, which you need to succeed at this. And so a way that you can have that conversation is you say, hey, if you invest as an LP, I'll just use generic deal terms and not your deal, you're going to double your money in 4 years. However, if you can go raise $500K, you're actually going to triple your money here. That's an effective way to seed that conversation of start your own fund of funds and stuff like that. And that's usually going to be the easiest place to find a fund of funds manager is an LP who's been with you and experienced success and experienced the brand, because that also makes it easier for them to sell. Because then when they are approaching their network about this deal, they're like, oh yeah, I'm already in this other deal. I'm really happy. It's going really well.
Yeah, it's a good idea. I have thought about that in the past of trying to, look into our network, especially those who are invested with us and say, hey, there's opportunity here. And we do, we have reached out to some other capital raisers and they don't necessarily have funds or fund of funds. I've talked to a couple people. We've even looked at starting our own and having somebody come in as a fund manager. Of course, that's not going to help this deal, but for future deals, and are willing to, work with those people as kind of a part of our GP or a part of our team, so they can take advantage of getting experience or operating a deal or even having a bigger share of the pie. So we're open to all those strategies. And I'm a big believer in who, not how, by the way. That's why I love that book. I've had success in my career building teams. I've led large teams, small teams. it's one of the things I absolutely love to do in my role. I love working with a team. I love collaborating. Clearly, I'm not good at everything, and I'm realizing the sales and marketing piece is where we need a lot of support. So I think within the three of us, it's a gap in our skills and our experience, and and it's being revealed to us through this capital raise, and I'm all about it. Like, growth doesn't come easily, and so this is an incredible conversation. I'm learning a lot. I'm taking notes and
good,
listening intently. So appreciate it.
The last thing I will kind of harp on there is I've heard reading your background and kind of talking on here is like you have leadership capability. You have the ability to build teams, which is such a hard skill to develop. And if that's like a strength and passion of yours, my inner me is like, hell yeah, double down on that. If you go out there and recruit the right people, recruit the right fund managers, recruit the right interns for some, recruit some of the right LPs into there, but especially like that fund manager, and kind of recruit those people and then cultivate the relationship and build that team. I mean, to me, I see that as like your potential, like biggest way to like your biggest capital source and probably your best ROI on time and, minimal capital outlay as well. So like, I think that's a skill that you have. Like I would absolutely like double down on that.
I'd say the other thing that's true, but regardless, another thing that you guys should do is I think record just a little bit more content. I would do a video with you and the partners on the story of the brand. I would do a video with you and the partners on a case study of your last deal. Because whether you're working with a fund manager or yourself, you're going to need those two pieces of content.
Yep.
And those also always go in the drip when you're raising a deal. Because if someone gets interested in a deal and they want to be like, what have you guys done before? Hey, go watch this other video of like our last deal, or go watch this video of us and the partners talking about like our backgrounds and how we got into this. One, those two videos are really important for generating trust and like proof, what you need to get people to invest with you. And number two, those just like record those once, you're going to need those forever. Another thing that I would do is probably the most approachable, like mass marketing and getting the word out channel is going on a podcast tour. Also because I think that doesn't require, telling on myself here, a great degree of skill or time, and that there are a lot of specialist real estate podcasts, A, and B, there are specialist real estate podcast booking companies, and they're usually rather affordable. Like on a per appearance, you're going to be paying like $300 or $400. And like the nice thing about that is that it's not a one-time thing. Like if you hire a booking agent, or you can go and DM the people yourself too, like all depends. If you're just constantly getting the word out on who you are, that is stuff that's going to get the word out. It also lets you say, hey, I was on this podcast. Hey, I was on this podcast. It builds trust. It gets the word out. And also, like, I think anybody can do it. It's like one of the few really effective marketing channels and strategies where like you just show up and get interviewed. I mean, you'll get better at it. Like, I think you're doing great today for the record,
I appreciate it.
But like, I think it's turnkey. Like, that's the nice thing about that. Like, if you were to get into Facebook ads or LinkedIn, both of those, like, here's the thing with LinkedIn. Like, LinkedIn is hard. It's highly competitive, especially getting into the DM game and everything else like that. Like, you're going to have a lot of learning that costs time and money, like, to put it like really bluntly. Is you're going to invest a lot of time and money even figuring that out and how to do it well, versus I think like going on a bunch of podcasts, like I said, it's turnkey kind of strategy.
What do you think about LinkedIn Live? Have you utilized that? I've heard people say that that's a really effective tool.
So there's two things to get out there and do. So if there's creating content and there's getting distribution. So LinkedIn Lives, YouTube Lives, Facebook Lives, that's great for creating content. But a big thing you want right now is distribution, right? Like you need to get in front of new eyeballs. And I looked at your LinkedIn profile, but I imagine it's, you're not a LinkedIn influencer or a Facebook influencer, right? So like rather than focusing on that, I would do some core content like Richard talked about. Hey, the past deals, underwriting tips, things like for core content can be repurposed. But I put a lot more effort on, hey, how can I go content and get distribution, like the podcast tour, or hey, go pay a webinar, go hire a webinar slot to go pitch your deal, right? Like I go out there and get distribution as well, because building up like content in your own following it's amazing in the long run. I've done that twice in my career, and one's been for our real estate venture, but it is years and years and years and years of sweat equity. I would focus a lot on distribution now as well, rather than like LinkedIn Lives for just pure content. Now, I'm not saying don't do it, but like I would not make that like a main leg of the stool.
Well, yeah, because until you have a huge following, not that many people are going to watch it. I mean, that's kind of the catch-22 that you're in right now.
I appreciate that.
Yeah. But I know we are kind of wrapping up here at our podcast recording block here. But Jarrod, this has been a really fun podcast. Thanks for coming on. Thanks for bringing your deal.
Yeah.
Thanks for talking about some of the strengths, some of the struggles, because everyone out there is facing it. But this is how we all get better. And again, I cannot emphasize enough the point of this podcast, the point of the Best Ever Community. It's about connecting people together to go out there and do deals, right? So, hey, if you're a capital allocator out there, you might say, hey, I'm gonna give this Jarrod guy a call. Let's go out there and build a relationship. So plug in the community, go out there and connect with people. And Jarrod, we'll put in the show notes, but what is the best way for people to connect with you, to learn more about you, your company, and your deals?
Sure. So commoncapitalinvesting.com, Jarrod at Common Capital Investing. That's Jarrod. My parents, used a double R there and the O. So, just email me there. You can also find me on Instagram. It's Jop at Instagram, just JARJOP. I'm pretty active on Instagram, posting about different things. So reach out there.
Love it. Cool. Thank you so much. And we'll see everyone next Monday on next week's episode.